Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. We got a big day of earnings over the last 24 hours, so a lot to go over in the entertainment and gambling space in Asia specifically. I think this could be a really great growth area, and this is kind of a bellwether for that region. So I asked Jason Hall from The Smattering to come on. Jason, how are you doing this morning?
I'm good. These are going to be some fun ones to talk about.
And if you haven't already, please follow me at Riiv Investing here on YouTube, at Travis Hoium on Twitter, and then Jason can be found at The Smattering on both of those, and he has a podcast as well. So listen to that. Let's talk a little bit about Las Vegas Sands. This is an interesting one, and the context here is I'm interested in what sort of this reopening trend going on is. What's been really fascinating in Las Vegas specifically over the last 2 years is, I mean, the U.S. was sort of locked down for like 3 months, and then depending on where you live, the restrictions were different for maybe a couple of years. But the Las Vegas Strip is reporting record gambling revenue all time. Now, basically, revenue was flat from 2005 to 2019. And then suddenly we come out of the pandemic and we take a step higher, like 30% higher.
Right.
So I think that's a really interesting trend. There's a lot of pieces there that I don't know exactly how to react to it. Is it more people doing remote work? And then, well, we got to get together once a year. So either let's do it in a place like Las Vegas where that's easy to get to, or are there's starting to be more conferences. I think that was less of a pull over the last year. It probably will be more helpful in the next year. Is it people wanting to travel more because they're working at home?
How much of it was pent up demand from people that Vegas is where they went, just where they happen to go?
Yeah, but it's like we've overcorrected so far that we've almost made up for that lost period of time.
Travis, I know one of the things you wanted to talk about, I'm going to kind of tee this up for you, is that I think, say what you want about Vegas, but I think unless you follow the gaming industry and these companies really closely, the average person that's watching this is like, okay, so there was a bunch of growth and it's just going to be what it's going to be. Gaming companies, and especially Sands, this is not about Vegas at all.
No, in fact, they don't have any exposure to Vegas anymore.
Right.
They sold other Las Vegas casinos. This is almost entirely a Singapore and Macau business. Macau, pre-pandemic, was about 6 times the size of the Las Vegas Strip from a gambling revenue perspective. Singapore, I don't have the number in front of me, but I think there are 2 casinos there, and I think those 2 casinos did almost as much gambling revenue as the Las Vegas Strip.
Right.
The numbers are crazy, and Las Vegas Sands owns one of those casinos. So I'm going to share part of their.
These are largely China stories too, in terms of where their customers come from.
Yes, where their customers come from, and I'll show that in some of the numbers here. So here's just the high level numbers, and they do go back to 2019 for a reason. You can see here just from the revenue perspective, $3 billion in revenue in Q4 2019. A year later, it was down by 70%, and we haven't really gone anywhere since then. I think in the U.S., if you're a U.S.-based person, you think that the pandemic may have ended a year ago or 2 years ago, depending on where you live. In China, it is kind of just getting started. Like the COVID numbers are crazy right now, but in 6 months, they'll probably be doing what we were doing in the US in summer 2022 from a getting out and going and traveling again. But it hasn't happened yet. Adjusted property EBITDA, this is a number that is useful in the gambling industry because you spend multiple billions of dollars building a casino up front. And then what you want to understand is what is the cash coming out of that casino. So the depreciation in items like that are non-cash are not as important as they are in a lot of businesses because you do want to get a proxy for what the cash flow are. So that's why this is a useful metric.
A lot of that depreciation is tied to the physical asset, the real estate, the properties, which, like most real estate, tends to hold value or even gain value over time.
Yeah, exactly. Adjusted property EBITDA, $1.2 billion in Q4 2019. We're still only at 329. Is doing pretty well again, but this is largely because of Macau. Again, here's just a visualization of that. So if you're an investor looking at these companies, and what I'm looking at and thinking about right now is we saw in Las Vegas that when things opened up again, people went crazy. What happens in China and Asia when we go through the same cycle, but people have been stuck at home for 3 years or not been able to travel for 3 years. I think that's the trend that I'm going to be looking at. All of these numbers are down. This is the mass market table win. So this would be the win per table by quarter. And then here's the Macau mass market business. You can just see falls off a cliff. They actually had their first lockdown in February of 2020 before most of us even knew what COVID was. And we still haven't recovered. We're still down from those early days. So visitation again. So the story here is not necessarily about what the quarterly numbers were, but that a company like Las Vegas Sands is just kind of bumping along. Here you go. This is Marina Bay Sands. This is the huge casino that they have in Singapore, starting to get back to decent numbers. Singapore did not have the same zero COVID policy that China has until recently. So this was the most profitable casino in the world pre-pandemic, starting to get back there. But again, we're still not there. So when I look at these results, I just see so much opportunity in 2023 into 2024 and say, where do we go from here? I think we could go to a higher high than we even had before. The other thing that has happened over the last few months is that Las Vegas Sands and the other casino operators there got an extension, a 10-year extension for their gaming concession. They are basically given the right to operate casinos in Macau, but they apply and there's only 6 concessions. And I think their commitment was to invest $3 billion in properties there to expand. This is really about a future story, but we're starting to see the thawing of the Asian market. You're seeing that first in Singapore, which we saw a little bit, but that's still down from 2019. Macau is going to be the story to me of 2023. I think this is a region that could be, it's literally a train ride away from like 100 million people in China.
Right.
and the amount of money that could be coming to Macau over the next year, depending on the rules, the visa rules, could be really tremendous. And I think that's going to be a tailwind for Las Vegas Sands, Melco Resorts, Wynn Resorts are the 3 that have kind of the most exposure. And then MGM Resorts is the other one that has the least exposure just from a percentage of its business basis, but it does have 2 casinos there as well. Any thoughts there just broadly on the numbers or
Travis,
the trends?
I've actually got a question. So we talked about Tesla earlier and the delineating between loving the business and loving stock. And my question on Las Vegas Sands, I'm going to share a chart here, hat tip to the good folks at Y Charts. This is from the kind of the lows last June. The stock is up 90%, right? It's up pretty sharply. Just this year, it's already up. So I think the point is that there's a lot of investors that kind of have the same sentiment that you do. Even with looking the other way, the stock is still down roughly 28% from the pre-COVID highs. So my question is, where in the middle is you've seen this increasing bullishness in its prospects, the likelihood that it's still going to take some time, months, if not a year, before we really get to that point, and what its future could look like compared to the kind of business that it was, 3 years ago. Thinking about the valuation, where do you put it?
The fact that it's still down pretty significantly from pre-pandemic, I think, is what we need to look at. Because like I said, the Las Vegas Strip is generating about 30% more revenue than it was pre-pandemic.
Yeah, I think it's a stock that peaked in like 2018, right?
Yeah, and then it basically became a dividend stock.
Right.
I've written a number of articles saying actually the reason to look at casino stocks in 2019, 2020 was it's actually a really good cash flow business because there's not a lot of places to invest new money. So they're just going to keep either buying back shares or returning money in the form of a dividend. I think that still remains to be the case for a company like Las Vegas Sands. The question from an investor perspective is the eventual high, whether that comes in or recovery in the business, whether that comes in 2023 or 2024, is it higher than 2019? Because in Las Vegas, it was much higher. That incremental revenue is going to be very high margin. And so that I would argue that that's where your upside is in the stock, is there being just a flood of business going into Macau. I think that will eventually happen. Like I said, I don't know exactly when it will. The market is starting to price that in more.
Right.
And I've been writing about this for 6 months or a year. So some of that has already played out. But I do think there is still significantly more upside. The other thing is a lot of these companies have a lot less risk on the balance sheet than they've had historically, because they have sold a lot of their assets to REITs if they're in the United States, or they just don't have a significant amount of debt. So the leverage profile is a little bit different than it's been in the past. So that's another thing to think about. For a company like Las Vegas Sands, really the worst casino that it had was the one in Las Vegas. And the other ones spit off so much cash in a normal operating environment, a pre-pandemic operating environment, that you would finance that 100% with debt if you could, because your payback would be like 18 months or 2 years. So I generally think that there's going to be a big recovery in the regions that they're operating in, and we haven't seen it yet. And the fact that the stock is still down, the Las Vegas companies are reporting crazy numbers. MGM, I haven't dug into the numbers in full, but BetMGM, their online business, reported higher than expected revenue too. So people are out spending money, doing stuff, and looking for entertainment. And this is a great place to get exposure to that.
If I was to put some frames on this, looking at some past numbers, of course, they cut the dividend off completely when the pandemic happened, which makes sense. But if I were to think about the price for the stock today and look at the dividend that it paid in the past, which was a little more than $3 a year per share based on the last dividend that it paid, and say that dividend comes back in a couple of years, I would lock in a 5% plus dividend yield at today's stock price with 50% upside in the stock price just to return to its pre-pandemic levels. That sounds like some pretty good upside to me.
Yeah. And one way to play this too is just to buy a basket of these companies. I own, I believe it's Melco, Wynn Resorts, and MGM Resorts. Add Las Vegas Sands into that. I think that's a good way to get exposure, and you don't have to pick which one is going to be the winner, because this is a tailwind for the entire industry. Thanks for watching. Jason and I will be back here on YouTube and on Twitter, so follow him at The Smattering Show on YouTube. Subscribe here to Riiv Investing. Thanks for watching. We'll see everybody next time.